Good morning. I'm not sure if we're going to go out the end of this week into the holiday with the markets in a coma, or whether this is setting up for a bit of a blast off to the upside. Um, so I think we better be on our toes here, because this kind of trading action can kind of put you to sleep. And then all of a sudden something happens. So and things are just chopping around sideways like they have been here, it kind of gets like boring, of course. And then you have the choice, to just take off some time or, set your alerts and wait. Yeah, it's a very nice consolidation. Everything's bullish here, we've talked about the different variations of bullish price action. And so what we've got going on here, I'll just get a little thing here. So obviously, we've gone through the fact that this was the break on the ISM report and the recovery on the jobs report. And so when you get a break like that, which is, after it's been an uptrend, we become very, skeptical of, as we should be, that this is the change in a trend. And so our tools force us, to recognize what's happening. So we got the bottoming tail over here, and this sideways price action at resistance was bullish. And the bottoming tail bar, right? We read things bar by bar to read what others are doing. It's not about, oh, this is a head and shoulders top, or, the different names of a pattern. It's more about reading the tea leaves, if you will, as to what big money is doing. And so price action like this, as we talked about back then a week or so ago, was, might this turn into an M top and prices come down and retest or even go lower? So the bottoming tail bar tells us that there is demand lurking below, and it popped back up. So this sideways action here, and especially this bar that closed almost exactly on its high, said, hey, it's going to go, it should go, right? When we look at price patterns and we know the historical results of these patterns, it produces thoughts in ourselves, which create beliefs about what should happen. And we place trades with proper money management based on those beliefs. In essence, that is, I would say, a decent definition of trading and what we do. So now that prices have moved up, and one of the things that I talked about was, when we see a move above a high, we want to see prices get, for a better explanation, a very decent distance above that high, not a little peekaboo above the high. And the reason for that is, if prices should pull back where it can reach where its buyers are going to be, right, prior support, right, what was resistance becomes support, it doesn't damage the uptrend. It's just a normal pullback, versus some little blip above the high and a pullback really puts the trend in question to where things turn into a sideways trend, which could result in a breakdown. Whereas this pullback, even if we had a couple of, even three, correction days down here, the trend is still up and your bias should be to buy. Now that it's going sideways here, it's building what should be a launching pad to go higher. That's why I say don't become too complacent, because the market's going sideways. Now, one of the tells to look for, possibly, I don't know if it'll happen, is what if a bar like this happens today and the markets dip down and take out these lows, right? This little base that's been going on here for the last 3 days, and it's a bottoming tail bar at the end of the day. You should be a buyer. Now, you could be a buyer at the end, or you could wait for it to take out the high. Personal choice if you want a little extra confirmation. But, sideways, I'd like it to have a little correction bar, because then we know that that correction, like let's say it takes out these stops, and the essence of that, right, the thought process is that it removes supply, right? Supply and demand is what's on these charts. So point being, those that are buying here they're only doing that because they believe prices are going to go higher. So if it breaks out, at some point, they're going to look to take profits on the way up. Now, if it takes out these lows, we know that this is a obvious place where there's going to be stop losses. So taking that out takes out the stops, it springs back up, and it kind of relieves the potential selling pressure or some of it that could occur on the way up. Same thing as here. Whereas if this would have just, pushed higher, there's going to be some obvious selling for buyers that are here. Whereas this little sideways consolidation, and maybe this took out some stops, which kind of relieves what selling pressure could be up. So what I'm explaining is how we interpret price action as to what people are doing with their money and what's likely to happen, because it's not about, stochastics and MACDs and RSIs and, overbought and oversold and buy signals based on that. It's about understanding what you and I and institutions and so on are doing with their money, and historical patterns that suggest that buyers stepped up here, or this here is a larger bottoming type of a pattern, which has larger implications of a move versus looking at an hourly chart or even less. But we interpret all of these pictures that I'm talking about in exactly the same way. And the true art of what we do is understanding this in multiple time frames. Right? Whether you're a swing trader where you wouldn't need a 15-minute chart, you could get away without using the hourly, or if you're an intraday trader where who cares about the weekly chart. So that is the master trader approach on how to interpreting this price action, and different price patterns, right, will have different interpretations. Right? So cues, right? Kind of more of a little grinder kind of inching up here, little topping tail there. Remember, this was the other day that just kind of went nowhere, but you can see the little breakout here out of the range, move above that high. And it's the same thing, right? If the S&P was going down, the Qs theoretically could go down. And then if we were to get a bottoming tail bar at that time, I like the spiders a little better, but they should both go up. They've kind of had similar patterns and moving in a similar way. Now, the Dow here, now here's an example, right? We've already talked about this week, is that this kind of barely took out the high, but it's not going down, right? It's still going sideways here, and, building that same base, a little sloppier, but here today, you see it's hanging there at the top. So again, looks like could break out. It's slow. We're waiting. Yesterday looked like it could have broke out too. It just didn't. So we're waiting to see what happens. I'd love to see, as I already said, a little blip to the downside where buyers step up, and that little correction bar relieves the potential selling pressure. And it just gives us a continuation pattern. Right? So that is, that type of price action where prices would dip down under a few of these lows and come back up. It's a correction, right? So it's one bar. So we call it a correction bar. And that suggests or signals, well, let's get going again. So we'll see if that sets up today. The Russell's been kind of leading, right? It's been playing catch up with the others, where the others led the way, and this was a dog, all year long. And this one but it's been a grinder. It's kind of grinding its way up into that void that we've talked about forever this year. When it would come up here, will it get out? And it went back down to the bottom, and again here, and went back, and here, and bent back. And so, we've gotten that similar or somewhat similar price action of consolidating. This is really textbooks. Those of you that are new to Master Trader or watching on YouTube and these things I'm explaining about price actions, you guys should be hitting the print screen button on some of this stuff and making notes, because this is what we want to see when prices push up to the top of the range. some sideways price action where it refuses to go back down. Right? We didn't have the little correction bar. Sometimes we don't. But, again, there's so many different variables. So getting hung up on one pattern is limiting. Whereas applying bar by bar analysis to a bigger picture view, right, opens up the door to many different patterns. Do I think impeachment is already priced in? It would seem so, Roland, because right, they're voting to impeach him, and everybody knows it's, let's just call an impotent, delivery when it gets to the Senate, because nothing's going to happen, right? Right? Who cares at this point? This is a BS thing that's going on with the Democrats that are not working in our favor. They just hate the guy, and they think that they're going to tarnish, his reputation and history by what this done. I think that they just go down looking like idiots, So let's see what happens in November if they all get thrown out, and maybe that'll be a lesson to all politicians not to be such assholes and doing with their personal hates, and that's not what they're there for. So enough of that speech. So no, I don't think it cares. Oil, it's a grinder. It got to the top of this little range and it's headed up to the top of this range. So simply support, resistance. It was a pretty much of a mess here. Sure looked like it was going to go down and then didn't. And this is the retracement concept, right? Nasty red bar. That looks like it's going down. No doubt about it. Well, it retraced 100% of it. Forget that going down idea. Sideways consolidation at resistance, bottoming tail bars, correction bars, buyers on the dip. It should go higher. Go higher to where? Up here. Then just follow bar by bar. See what it does. Bonds are breaking below this low area here. Maybe it's coming down into this area. You got to be a little careful with this kind of a pattern like this, because there's no base here, meaning there's no consolidation and then a breakdown where it spent a lot of time trying to, hold and move up, and then it couldn't. And like, let's say it's got a topping tail on it, try to move up. I don't know that it'll happen, but I know historically, this kind of a breakdown is one you have to be a little skeptical of, that it doesn't come right back in your face. So we'll see. Right now, it's breaking this little support area, and there's the next area, a little larger area there. So this might actually, maybe it could turn into a W bottom. We'll see, tomorrow or next week. Anyway, nothing to do there as I see it. Gold consolidating at resistance is really sloppy, So here's a topping tail, kind of similar. Right? It doesn't look similar, but similar interpretation of, this went down and it retraced, right? Like we were looking at crude oil was bullish. Well, here's a topping tail where sellers took advantage of this move here, slammed it down, gapped down, and it comes right back up again. So gold is being bought here. Maybe it needs a little bit more time. So keep an eye on that. It's just kind of shaping up here. It's a little messy with the tails. Really, Salty Mike is telling me I seem intelligent. He's not sure I'm intelligent yet, but he's a little, maybe I am. I'm reading what someone's saying to me on YouTube here. Guys are there. And until you spout political ignorance, turn off Fox News. Salty, you're entitled to your opinion. I look at things objectively, just like the markets. And in my opinion, what's going on here, as I said, is bullshit. So in the end, history will prove whatever is ignorant or not. You can't deny that things look pretty darn good out there. So I don't know who's brainwashed, but why don't we pay attention to the markets and ignore my political views or yours? Well, I'm ignoring you officially. And silver, similar kind of price action over here, sideways at resistance. So I like this price action here. And because of the monthly as well, I don't really care for this, wide range bar, and it's down at the bottom here. It's got to prove itself. But, we know gold and silver broke out of long-term monthly charts, and they're just going through this correction mode. And, okay, again, a little long here. Last thing we look at is the transports. FedEx fell yesterday. It couldn't get off the mat. But the transports, while they gapped down, they really weren't damaged because they're just trading within this range here. So if the transports can kind of get going out of this little range that they're within and move up toward this 200 or better, well, I think that brings us back to, this continuing to push higher. So we'll just see how it all unfolds, right? So we look at these different markets in different time frames and create a bias, and then we wait for our signal. And if we get something that says, hey, it ain't happening the way you thought, well, we change our opinion. It's that simple, right? So that's it from me and all of my comments. All yours, Dan.
Oh, come on, that's not all your comments. I guess you mean all the ones you want to share at this point in time. All right, I just updated the stop on our Tilray short here. Looks good. All our opens are fine. So let's go right to gappers. FLT. 287. Yeah, it is, it's a bearish gap. But, again, just to summarize what I'm looking for this morning, and they don't have to be gappers, it's anything. There are things still on our watch list from yesterday. For example, TUP. TUP is a 1, 2, 3. So that's a go. It's not a gapping play. It's just a tier 1 trade ready to go. Another one, LYB. I would love this if it can go sideways a little bit more because it's still extended on the 15. But, you buy the high, stop the low. So FLT, I don't know what to do with that. I don't have a bias. It's a bearish gap. So that's why it's not a tier 1. Yeah, but put or call, McGraw. Call spread, good friggin' luck. Getting juice up there. 300's tight, but you got to wait and see what it does. It could. Part 2 is on the gappers. You know the drill. I'm summarizing for new people. I'm looking for a compelling gap, and then put it in a 5-minute thumbnail, and it sets up within the first 30 minutes. YouTube's asking about Weight Watchers. We actually talked about this in our MT Live yesterday. It came down very hard. It stabilized. I got my reversal, a minor support in the rising 50, and it broke out, and there's a price void. So yeah, over yesterday's high. Target 42, 42 and a half. You all crack me up with your fundamentals. LDOS, beautiful gap yesterday, McGraw. How did we miss that one? Now it's gapping up to 96.40, so I'm not chasing it. That would be one that if we got a 1, 2, 3, if we had an inside bar today, then I would do it. Russ on Nike. Why are we not in Nike? You know what? It should have been over the high of these 3 consolidation bars. Then we should have been to all-time highs, definitely. Just like Greg said in the IWM, these 3 resting bars at resistance, we did get our, well, actually we've been in we've been in IWM in our ETF trader since this gap uptick. Kind of a bull flag consolidation and then gapping up. So beautiful. All right, back to my list. Mitch is like they're spinning off their Match.com, I think. I don't care the reasons, but if it can get over this red bars high, over 73 bucks, yeah, that is room and a put spread. TiVo merging with somebody, that's a bullish gap. This kind of looks like our MT live yesterday about dumpster diving. Look, every time this thing tried to break out on the weekly, it got slammed back down, but you know, the target's not great because of all this resistance of $9. APOG getting whacked. Wow, that's a big whackage. Gapping under all this weekly support. Wow, gaps too excessive. It's a bearish pre-market. CBIO, I think, is a bio 6.25. You know what? This one also might be a dumpster diving stock. Yesterday's discussion. This is a pro gap. What is a pro gap? It's one igniting a new move. This isn't a downtrend. Look, lower lows, lower highs, declining 20, railroad track 50, nasty weekly. And now it's gapping over all of this. Look, this is a beautiful dumpster diving trade. You know, with a gap this big though, you would need a big stop. Let's put this in a window right here. EPEC will be easier to trade. I'm not sure what that means. So that, yeah, it's gapping up. That one's too far from the 20 for me. All right, Tupperware we talked about, a 1, 2, 3, Twitter. I like the action yesterday. So I'm looking for an intraday pullback, whether for a directional and a put spread. Old Tupperware, not Tupperware, RAD. Nice wide range bar yesterday. Looks like somebody knew something and they're getting paid for it today. 1090, wow, it's a huge gap, nothing to do with it. Is that a buyout, McGraw? Is somebody buying that dog RAD? Too far from the 20, gapping up, nothing to do with that. The earnings made that thing gap that much? Tesla, one of these, it's at all-time highs, which makes it more dangerous. But gapping up over $4 after up 10 bars, far from the 20. These, I personally would be selling into that if I were long. 430. Another dumpster diving, but the weekly's a mess. WDC 5890. Here's another one. A run this big, I'd be thinking selling into that. Same with MU. Look at this big old run. 5530. But I'm just deleting these because unless you just want to do a day trade short, there's really nothing to do. 1213, that's damaged. Deleting you. ABM 3550, very bearish gap, but it's a big old sloppy mess. G dot gapping down to the lows here, 23 bucks. That's bearish, but no great pattern. Miller Herman, that was a bullish close. It looks like, it looks like maybe some inside information. They got fed wrong information saying, hey, Get in ahead of earnings and you'll be very happy. And then you get a shock. It's gapping way the heck down here, ignoring that red bar. That's an ugly, ugly gap. But I don't know what to do with it. The gap's big. 261 bearish gap, but the support. Oh, here's the EPAC that Alex mentioned. DRI 112, bearish gap. Call spread, you know, but it's actually holding here on the 15-minute. I'm having a hard time coming up with tier 1 setups here. The gapping trade wise, I still like the Tupperware. What do we got here? 3090. Now see, this would be a tier 1 trade if it were gapping right here. I'm looking for the ones that have a shock event. They're clearing resistance and they have a price void. But then my target would have been right here. So it's like gapping to my target. So there's nothing to do. APOG we talked about already. NMIH. This was okay. So this was a leftover from yesterday that I said a subscription. All right, see, a subscriber gave this to me yesterday, emailed it to me. And I said, yeah, I like it. I said, my answer was buy it over the high. He gave it to me, you know, somewhere in the afternoon, somewhere in here. And I said, buy the high. He's probably kicking himself right now saying, man, oh man, wish I was in it. And he might be. He might be. I told him I liked it. McGraw, this would be a beautiful 1, 2, 3 as a directional if we get it. This was yours from yesterday. An AMT also. That looks fantastic. Oh, here, Alex, this LYB right here. I'm going to put AMT here. AMT looks great. LYB gapped over the high. We can watch the pullback. JCI, yeah, bearish if it goes under those lows. There's LYB, MET. NXST, this would have been a beautiful, beautiful one to have bought yesterday over Tuesday's high. Look at that wide range bar to engulfing to the top. Breakout daily, weekly. That is a no-brainer setup right there. Yeah, I like Mitch. I'll give it 5 minutes. Wow, Q's ripped.